How to use a Stochastic and Pitchfork tool. How to use a Stochastic and Pitchfork tool. We're on a monthly chart of EOG Resources Incorporation. This is an American stock that is listed on the Russell 1000 index. And we want to discuss how to use a stochastic and pitchfork tool. All right? The stochastic indicator is a momentum oscillator that is very, very popular, but traders are misusing the stochastic oscillator. However, the pitchfork tool is a powerful technical tool that most traders are neglecting. Only few traders are using the pitchfork tool. My intention is to encourage day traders, swing traders, position traders, ordinary traders, retail traders, scalpers to use more the Andrews pitchfork tool. In this tutorial, I want to share with you one more time, few tips and tricks that you can use, when one wants to combine, the stochastic indicator and the Andrews pitchfork tool. Let's get started. Now, generally speaking, what usually takes place when traders are using the pitchfork tool and the stochastic, what we have noticed that traders will always try to buy whenever the stochastic is oversold and the price is pulling back to the edge of the pitchfork tool. And sometimes it works beautifully, and sometimes it does not. So here you can see that the stochastic was oversold and the price pulled back near the lower part of the pitchfork tool. People will try to buy here. Here you can see it worked, it went up a bit, hit the median line, people took profit. Price pulled back again near the lower part of the pitchfork tool. Stochastic is bullish, displaying a higher low. Alright, this stochastic form a higher low, it's a bullish oversold, and now the price also touching the lower part of the pitchfork tool, people will buy. As you can see, it is also it worked this time, and here we are, we have another scenario here. The stochastic pull back to retest the median line of the pitchfork tool, and the stochastic is oversold. This time the price went up a bit and quickly pulled back. This is a tricky one here for traders. So here we have again a scenario, the price pulled back again to the edge of the pitchfork tool, and at that point in time the stochastic is also oversold and people buy here and the price went up again. But sometimes, as you can see, it's more to do with gambling than knowing exactly when one should buy and when one to sell, and how one should buy and how one should sell when the stochastic is oversold or overbought. Another thing I need to show to traders is whenever the stochastic is overbought and the price rally up to the edge of the pitchfork tool, traders also try to sell each time. Sometimes it will work, sometimes it may not work. So when should you know that, I should be ready to buy? So how do you identify the high probability, high probability trading setup, to filter out, false, trading setup, This is what we want to talk about, giving traders a few tips and tricks. So stochastic is overbought, price touches rally up, you see people are selling, but here we have one, it touches here, the stochastic 833, which is my favorite setting for the stochastic, is also overbought. Here it went down a bit only and quickly ran away to the upside. All right, so we see traders are playing with the stochastic and the pitchfork tool, and sometimes it works, sometimes it does not work. Why? Now the question is, why sometimes it works, why sometimes it does not work? And I will be sharing with you a few tips and tricks that you can apply. So remember what we are doing. So if you are new to us, so some traders have been following me since years ago, they know exactly what I'm about to talk about. The best approach, you learn something, all right, you use a demo account, test it. Do you like it? All right, if you don't like it, don't use it. Is it working? Good. How to use it? So if you learn something new, it's going to your head. But now to develop the skill, it takes time and experience. But usually people skip it. So people learn something, they try first time, they fail. Because why? They don't have the skills. They have the knowledge, but they don't have the skills. This is what is the difference between an ordinary trader and a professional trader. Professional traders have the experience and the skills. Ordinary traders, okay, have the knowledge, but they don't have the experience and the skills. All right. So by practicing more and more, when we gain more skills and have more experience and become more efficient on any subject. All right. So this is what we want traders to do when they watch the video. All right. You don't rush into quick conclusion. All right. Be careful. Don't rush into quick conclusion. Otherwise, sometimes you may say something and you are completely wrong, but because you believe in it so much, you're going to make a lot of noise, and then later on you look really, really like a stupid person because you were wrong and you thought that you were right, and everybody laughing at you, which is not good. Sometimes it's better to take it in, okay, say, well, I don't like this, walk away. Maybe a few years later, you say, oh, I like this, okay, great, move on, okay. All right, let's continue now. So how do we handle that? One thing I want to share with traders first, because I've been talking about this for some time, what I have noticed, all right, especially if you're a new trader, pay attention, okay? Usually, when we talk about stochastic, all right, traders learn about stochastic, oversold, overbought, stochastic divergence, and they learn it, okay? And they apply it, okay? Good. But then they learn about, for instance, Elliott wave or Fibonacci. Then they use Elliott wave alone, or they use the Fibonacci alone. But traders find it sometimes very difficult to combine, okay, Elliott wave, Fibonacci, and stochastic, because it takes time to become a multi-talented trader, all right? But what I'm going to do now is going to be a little bit like a multi-talented trading. I'm going to be talking about, okay, Elliott wave pattern. So if you don't know about Elliott wave, don't worry. I'm going to simplify for you. What you want to do to pinpoint the best, okay, oversold. If a financial instrument goes up from A to B, all right, and pull back in 3 moves, all right, I'm speaking a normal language instead of using Elliott wave language to you. I'm speaking a normal move. So price goes up from A to B and pull back, okay, without going to the beginning of the prior move. So it pull back in 3 moves and retest the edge of the pitchfork tool. Usually, have I say usually? Not always. Usually, that is a high probability oversold, okay, stochastic on the edge of the pitchfork tool. So I don't want the video to be too long, so I've been talking to you now for some time. I'm going to move on very fast. So you can see that this stock here is inside the pitchfork tool. So it went out from this point to this point, okay? See how it came down. It came down 1, 2, 3. It's what I'm talking about. And what? The stochastic is oversold. Very often, this movement is oversold stochastic on the edge of the pitchfork tool, primarily up from A to B, pull back 1, 2, 3 on the edge of the pitchfork tool, and stochastic is oversold is usually a high probability trading setup. Now, some traders may say, John, it's a signal to buy. No, it's not a signal to buy. It is a trading setup. Now we will use what? A multiple time frame trading method to trade it, paying attention to the S&P 500, the market, and the economy news, which can change the dynamics of the technical trading setup. So at this point in time, all we do, we draw our warning line there. We say, okay, it went up from A to B, pull back 1, 2, 3 on the edge of the pitchfork tool, priority to bullish signal above the level of $36, and priority to bearish signal below, because we are ready to buy and we are ready to sell. But we want to buy only above the level of $36. But we will use a top-down trading method to control the risk. As a professional trader, you know, when we are talking at these people say, Joe, you are too arrogant, which I accept in this case because I have no regret for saying something that is true to traders. Because if, for instance, my friend, let's take it seriously, okay, that you have been employed as a trader for a company, for a hedge fund. They don't care about anything else than profit that you are making for the firm. And if you are not making profit for the firm and you are just diluting the asset of the firm, wasting money for the firm, losing consistently, they're not going to like that, okay, for sure. So professional traders, Okay? Always use a top-down trading method to control the risk. Pay attention to the market and to the economy news. I leave it to you to choose your own path and to decide which way you want to go. All right? Do you want to keep doing the same old things that are not working? If it's working, well, keep doing it. Okay? If it's not working, don't waste your children's money, throw your children's money away. All right? I hate that. Okay? If you have been losing, stop. All right? It's money, real money. Don't lose it. Okay? All right? So if you have too much you want to waste, okay, give it some to me. All right? Send me some money. All right? This is to make you laugh a bit. All right? And I will say to you, thank you. But the point I want to make, take it seriously. Use a top-down trading method. All right? That's all. So here we are. We have one here, which is good. Okay? The next thing I want to say to you, all right? Generally, okay, there are a lot of crazy trading software out there that are using Fibonacci, that are using, okay, Elliott wave. And some of them, they are stupid algorithms. But if it is making money for the owners of those stupid algorithms, they don't give a damn about it. Are we allowed to use that word on YouTube, on this channel? All right, okay. They don't care whether it's a stupid algorithm or not. But the most important that they do care about is that is he making money? So there are software, trading software out there, Elliott wave software out there. And remember this, if you trade in stock and the Nasdaq 100 is open, or the stock market is open, New York is open, London is open, most of the trading activity are conducted by trading software. In the past, were human beings, now trading software are trading buy, sell. And some of the trading algorithms are crazy, but they don't give it down. All right, it doesn't mean that they are manipulating the market, but it's just a trading tool. It's like I create my own trading tool. All right, and if it's making money for me, well, I don't give a damn what's going on. Well, so there are trading software out there that are counting waves. So price moves. So if you don't know about wave, it's a price move. So see here, price went up. Okay, so they go like this, price went up from here. That's one way. If you start changing direction, so we say this one wave, one move. You see here? This is the second move, yes or no? All right? So you may say this is the third move, okay? This is the fourth move, all right? And this is the fifth move, okay? All right? And this is, again, look at that. Price went up, sixth move. And this is, okay, seventh move, okay? So now, suppose I create a trading software. Pay attention carefully, my friend, because this will open your eyes so you may understand what's going on in the financial market. So I suppose I create an algorithm. I say, if you count 5 waves up, sell. So my algorithm count from here, start counting, say, first wave, second wave, third wave, fourth wave, and fifth wave. I say sell, okay? It will sell. Then I will say to my algorithm, I can program, say, if you sell, and the price did not go below the prior high, which is this one here. So my algorithm is very intelligent algorithm, intelligent software. Count 1, 2, 3, 4, 5. You see, just say to sell, it will sell. Now it sell, and I say no. If you sell and the price did not go below the prior low, which is this one here, okay, buy. Okay, so you sell, but the price failed to go below the prior low, then buy instead. Then the algorithm will buy again. And then I will say to my trading software, start counting again the wave. So here we are. So it start counting from here. 1, 2, 3, 4, 5. Here it says sell. Price did not go below the prior low, the prior high, it buys. So price goes up again. So what I will say to my algorithm is say, if it fails to go below the prior low, buy. Then my algorithm will count again. Now this time it start counting from here. You start counting from here. First start counting here. Okay. 1, 2, 3, 4, 5. Sell. Okay, sell. Price did not go below the prior high. You buy. Push it up. Now, I say to my algorithm, if you continue to count, so now you start counting here from the impossible, because the price is going down. It will not start counting from a down move. It will start counting from the up move. So it start from here. So you say 1, 2, 3, 4, 5. You sell, but it's not going to go 6, 7. No, you're going to start again. 1, 2, 3, 4, 5. Sell. Here again. So then my algorithm will sell here. Trading algorithm will sell here. Trading software will sell here. Trading robot will sell again here, because it is my trading method that are programmed to trade for me. I say 1, 2, 3, 4, 5, sell. Okay? You sell. If the price fails to go below the prior low, buy again. Okay? So, or if the price goes back above the latest high, buy. So here it goes above it, you buy. Then say start counting again from a bullish move. So it starts. So you ignore the first one. So because we are going to 6, so start here again. 1, 2, 3, 4, 5. Sell. So my algorithm sells now. Price went down. You see here, you struggle here. Okay, so it's, you see here, it went below. I'm just giving you one example, okay? Giving you one example. There are a lot of trading algorithms there, and you don't know what is in the program, all right? But it is no market manipulation. It's a trading tool for somebody, all right? For a firm. So now again, 1, 2, 3. Let's say you count it from here. 1, 2, 3, 4, 5. Sell. Now it goes below the prior high here. You continue to sell, because I say if the price did not go below the prior high, okay, buy again. Yeah, it went below it, so it continued to sell. It's continuing to sell. Price goes down, it continues to sell, because it should below this low, it continue to sell. Now you see that with my simple trading algorithm that I'm designing in front of you here, you can see what's going on in the financial market. So you may say to me, Joe, what that got to do with stochastic and pitchfork tool? You ask a very good question. Now let's go back to the chart again, okay? So you have a bit of idea, okay, about a trading algorithm, okay? Artificial intelligence, as they call it, okay? All right, okay? All right? I'm still here, I'm just noting something down for myself. So here, now you can see the stock here went up 1. So the point I'm making to you, I said to you, if a stock goes out from A to B and pull back 1, 2, 3, I can design that as a trading software, okay? And the stochastic is over, so buy. So this one I'm saying to you, that's the best high probability trading setup. We can program that to trade it. And then we can, okay, optimize our algorithm over time. So usually what is taking place, so companies, investment bank, hedge fund want to make money. They got the money and they are looking for tools that can perform the tasks without paying somebody else to trade it. So I can create for somebody a trading method and they can go around, test it, okay? Test it. So somebody will set a program and test it. And then we will say, okay, what we can do for this trading method, we will use only 30 pip each time. So over the time, we will optimize, okay, our trading algorithm to perform better. You understand? So another thing I want you to understand, when you are combining the stochastic and the pitchfork tool, think about, okay, trading software out there that are trading. So as I show you here, price goes out from A to B, 1, 2, 3 down on the edge, high probability trading setup. Now here we are, we say 1, 2, 3, 4, 5. Okay, price is on the edge of the pitchfork tool and the stochastic is overbought. It's also usually a high probability trading setup. So we have one here. So price goes up 1, 2, 3, 4, 5. It hits the edge of the pitchfork tool. Look for an opportunity to sell. Stochastic is overbought. This is about how to combine the stochastic and the pitchfork tool to maximize profit. Now, if you sell, like we are talking about the trading algorithm, and the price failed to go below the prior high, buy. So if the common sense trend line here is kaput, buy. Here it is. So you will buy after this trend line here is kaput. Now, if you do that, if the price failed to go below the prior high, now you will start counting again. So you count it here. 1, 2, 3, 4, 5. You sell here. Stochastic was overbought. You sell. But the price couldn't go below the price high. So you start buying after the trend line here is kaput. Now what I want you to do, like a trading software, you count the way from here. Because the first time we counted 1, 2, 3, 4, 5 was here. Price couldn't go below, okay, the prior high. Now we will start counting again from here. Each time 5. If it's going up or down. Is that clear? 1, 2, 3, 4, 5. Okay, price again above, but now again we have the stochastic. Here it is. The stochastic is overbought. 833 is overbought, and the price is also on the edge. Here is a bit tricky. So as I said to you, this is not a trading signal to sell. It's a trading setup. Then we will implement a top-down trading method to trade it. So the point I'm making to you, price goes 1, 2, 3. So price goes up from A to B, and then put by 1, 2, 3 on the edge of a pitchfork tool. Stochastic is oversold. High probability trading setup. Don't assume anything. Draw your warning line and implement a top-down trading method. Price goes up 1, 2, 3, 4, 5. Price reaches the edge, either the upper line or the median line or the lower end. If it goes down, you see here 1, 2, 3, 4, 5. You see here? This is what's going on in the financial market. You see here, this one? 1. Okay? So going down, you see here? 2, all right? 3, all right? 4, all right? 5. What are we looking for? We want the stochastic 833 to be oversold and the price to be on the edge of the pitchfork tool. You see here? So here we have what? Not a trading signal, but a trading setup. Okay. Now we implement what? A top-down trading method to trade it. So I'm on a monthly chart for traders that are new. Go to 24 Stock Trader. There is a video about multiple time frame trading method. What is a multiple time frame trading method? You choose such a video. What is a multiple time frame trading method? By 24 Stock Trader. You too will flash that video to you, okay? Or what is a top-down trading method by 24 Stock Trader. All right, you will understand more about what is a top-down trading method. I will be recording more videos about the multiple time frame trading method on a daily chart, on a weekly chart, on a monthly chart to explain to traders what is going on. Traders should understand that when we are recording live videos, it takes almost some time, the whole day or the whole afternoon or the whole morning, which is too much for me because the most precious commodity is the time, all right? So sometimes to record a live video takes too much time. Though you may see 40 minutes on YouTube or 50 minutes, the video itself, because we are pausing the video to reduce the time length of the video, it usually takes the whole morning or the whole afternoon. So that's why recently I did not spend too much more time on live recording, okay? All right? So here we are, we can see 1, 2, 3, 4, 5. Stochastic oversold on the edge, boom, all right? 1, 2, 3, 4, 5. So here, if for instance, here we are, you see here. So in this case, you counted 1, 2, 3, 4, 5. Stochastic oversold. Use a top-down trade method, you buy. If the price failed to go above the prior low, in this case we are talking about low, which is this one here. If it failed to go above the prior low, we will continue to sell it. Here you see it went back above it. All right, it's the opposite of what we were doing here. 1, 2, 3, 4, 5. Sell. Stochastic overbought. Look for an opportunity to sell. Top-down trading method. Pay attention to the S&P 500 and the economy news. Economy news relating to EOG resources. Economy news relating to the sector and the market, the S&P 500. If the price failed to go below the prior high, we continue to buy. On the edge of the pitchfork tool. This is about how to use a stochastic and pitchfork tool. You get it now? So we can do another thing that I'll show. So you say to you, price goes down from A to B, pull by 1, 2, 3. We can similarly, we can do exactly the same thing. Price goes down from A to B and rally up 1, 2, 3, and the stochastic is overbought, and the price is on the edge of the pitchfork tool. Now, traders that understand area wave will understand more what I'm trying to do here, because trading software that are counting waves do not care about area wave theory. They just say, okay, let's see So it's like a mathematician that care about everything being right, exact, 1+1 = 2, and the engineer that want to approximate everything. What is working, can he work for us? And he use the mathematics to build beautiful things. So this is what we are talking about. The reality of the market, the theory, and the practical day trading, swing trading, and so on. So I am designing a trading software to trade this, to use the stochastic and the pitchfork tool. So I say 1, 2, 3, 4, 5, sell. I fail to go above, to go below the prior high. Okay, continue to buy. Then restart counting from a new bullish move. So it's can count here 1, 2, 3, 4, 5 on the edge of the pitchfork tool. Stochastic overbought. That's a sell. The algorithm will sell. Price goes down. If it did not go below the prior high, well, and the common centralized kaput, it's a buy. The algorithm will buy. Now it will start counting from here now. 1, 2, 3, 4, 5. Price start changing direction before they start counting. 1, 2, 3, 4, 5. See again, 5. So each time you count 1, 2, 3, 4, 5, price on the edge of the pitchfork tool, stochastic overbought, it's a bearish trading setup. Price goes down. 1, 2, 3, 4, 5. Price on the edge of the pitchfork tool. Doesn't matter upper end, lower media line, or lower end. 1, 2, 3, 4, 5 down. Stochastic is oversold. Stochastic 833. My number one setting for the stochastic. All right, which the TSTW24 traders also are using. Okay, 1, 2, 3, 4, 5 on the edge of the pitchfork tool. Stochastic is oversold. Okay, all right. That's a bullish trading setup, okay? If the price, did not go above, the prior low, we will continue to sell. Then we'll start counting again from here, okay? 1, 2, 3, 4, 5. And then if the stochastic is oversold again, on the edge of the pitchfork tool, remember, oversold on the edge of the pitchfork tool, then we have again another bullish trading setup. And so on and so on. Does that open, your eyes to that? All right. If your eye has been open to that, then you have made, a big progress in your trading, because this is what's going on. So there are human being trading. Most of them are retail traders. But the big financial institutions are using algorithm trading software. So when we talk about that trader, we say, George, exactly, I'll go and buy a trading software. My recommendation, so in my view, so I can say my view, you can disagree with me, and we can still be a friend. So don't be afraid to disagree with me. Personally, I do not recommend to traders trading software. Does not mean that trading software does not work. My approach, or my view, personally speaking, when we are talking about trading software, should be personal. So should be private. So a trading firm or a high frequency trading firm can have their own trading software for their own purposes, what they want to do, which is okay. But if, my friend, you go and purchase somebody else trading software, all right, what you need to do, have that person email at least, all right, let that person be ready to answer questions about the trading software. Usually, those who build trading software will not reveal to you the algorithm of that trading software, because they don't want somebody else to copy and paste, their programs, all right? The copycat, they don't want them to copy it, which is normal. You create something that's working for you. You're not going to divulge that in a public place and say, this is the formula to calculate the short-term equilibrium price level. This is the formula to calculate the long-term equilibrium price level. This is the $1 million, knowledge, your proprietary, knowledge. So, therefore, they will not tell you what is in a black box, as so to speak, all right? They will not tell you that, which I think is right, but it is not, how should I put this to you? It's not helpful to somebody who purchases, because I would like to know how they build, the trading software. All right? I would like to know. But you cannot ask because they will not tell you. Okay, they will not tell you. They can't tell you. In fact, they cannot tell you. Okay, so which is understandable. But that's why I do not encourage too much the trading software. But you can build your own trading software, your own algorithm. So you know what is in the black box, and you want to automate your trading method, your trading style. But then remember, I was talking about optimizing trading software. So over the year, the trading software have improved a bit, because what I don't like about trading software, which I've been talking about before, is that a trading software can distort the market without even knowing, without even feeling it, without even caring about it. Okay, it's trading software, and there are a lot of crazy trading software out there. It doesn't mean that they are illegal. It doesn't mean that their intention is to manipulate the market. But what usually takes place, if I create a crazy trading software that is counting wave willy-nilly, buying and selling anyhow, remember, if you walk through the mud, you have your footprint in the mud, yes or no? All right, you walk on the beach, you see your footprint there. This is what usually happens. We are seeing a lot of footprint of crazy trading software out there, because the price will reveal to us what is going on in the financial market. What I've been discussing with you here is going on in the financial market, trading software, accounting 1, 2, 3, 4, 5, and then they sell. So there may be some trading firm out there say, George, you are speaking too much. Stop talking. If you want me to stop talking, well, pay me a lot of money and I will stop talking. But I will not stop talking here. But because I'm not revealing anything that is confidential, and I will never reveal anything that is confidential. All right. So I'm very, very serious about that. I will never ever reveal anything that they stamp on it and say confidential or top secret. All right. But we can share with traders what the things that are going on in the financial market. If you're in the market, you want to know what's going on. So the point I want to make, you can build your own trading software, your own trading algorithm, okay, and to automate your trading. But if you are building, a trading algorithm, like combining the stochastic and the pitchfork tool, do me a favor. Try to build your algorithm based on market principle or market stable data, things that are true in the financial market. Otherwise, you will be slowly but gradually, without even feeling it, distorting the market gradually over the time. This is one thing that worries me a bit when we are talking about trading software. I prefer that trader use the mechanical trading software, a written trading method that one learn, you see, put the knowledge in, which is like a software, and then build a skill, all right, and to trade it. And whenever you purchase a trading system, be busy to question the owner, all right? Ask questions. It's up to you, because when somebody builds a trading software or a trading system, that system, primarily belongs to them according to their trading style and everything. But a trading software or a trading system should be always based on a market stable data. This will allow traders, to avoid distorting the market. So, to put it very simple, in order to use the stochastic and the pitchfork tool, we are looking for something like this. Price goes up from A to B, pull back 1, 2, 3 on the edge of the pitchfork tool. Or price goes down from A to B and rally up 1, 2, 3 to the edge of the pitchfork tool, and the stochastic is overbought. In this case here, we want the stochastic to be oversold, and we want to use the stochastic 833. We can also use the price goes up 1, 2, 3, 4, 5 from A to B. Stochastic is overbought on the edge of the pitchfork tool. That's a bearish trading setup. We implement a top-down trading method to trade it. If the price fails to go below the prior high and it comes centralized couple, we buy again. And then we start counting again 1, 2, 3, 4, 5. Price again on the edge of the pitchfork tool. Stochastic 833 is overbought. That's another bearish trading setup. We implement a top-down trading method to trade it without ignoring the economy news and the market itself, the S&P 500. All right? Price goes down 1, 2, 3, 4, 5, okay, to the edge of the pitchfork tool. Stochastic 833 is oversold. We have a bullish trading setup. We implement a top-down trade method to trade it. If the price fails to go above the prior low, we'll continue to sell it. And then we start counting again from here, not from here, not from the first place. We start going down now. 1, 2, 3, 4, 5. And then we look for the stochastic to become oversold. And again, we implement the same strategy. This is about how to use, stochastic and pitchfork tool. If you have any question or suggestion or criticism or blame, all right, it's your time to put in the comment section. And in due course, I will record another video, okay, to answer your specific question, all right? We are the TSTW24 traders talking about how to use the stochastic and pitchfork tool. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. Speak to you soon.